Because the JSE has reversed the previous session's losses today, rebounding along with its global peers as investors assess the US inflation report that came in slightly worse than expected. Thabiso Mamathuba is an investment analyst with FNB, joins us now to talk about the situation. Thabiso, welcome back. The local index, I was saying earlier, as well as the currency, doing much better, slightly better, I should say, today. Why?
Once again, very positive mood in the markets that we are seeing this morning and this afternoon. The JSE Top 40 Index is up about 1% almost, with heavyweights, Nasdaq and Process just contributing the most to the index gains, rising about 2.5% and 3% respectively. So as you mentioned, this follows a very positive upbeat, or rather a very upbeat close in Asia just this afternoon, which basically extended an overnight surge from Wall Street despite this latest inflation data out of the US, which basically, shocked to the upside once again. This latest figure now cements expectations that the US Federal Reserve Bank will continue to aggressively hike interest rates. However, despite this, we're seeing a rally in global equities, and perhaps some market participants are now viewing this latest print as not bad as other reports, and are hoping that core inflation will soon start to trend lower. So in terms of the currencies, we saw yesterday that the rand briefly touched the 18 rand 50 per dollar mark as investors avoided risky emerging market currencies following renewed inflation concerns. But the rand is currently off its weakest intraday point and is trading just around 18 rand and 18 cents to the US dollar.
And let's talk about Danone. It's looking for a buyer for its Russian operations for the dairy and plant-based unit. The sale of that would result in a write-off, I think, of up to $978 million US. What would that mean for the firm's numbers moving forward?
So Temekile, this latest announcement from Danone follows similar announcements by companies with operations in Russia, and doesn't necessarily come as a surprise, really. So they are looking for a buyer for the Russian operations of their dairy and plant-based foods unit. This particular business unit in Russia contributed about 5% of the group's revenue on a year-to-date basis, and management said that the potential sale of this business could result in a write-off of a very significant amount, as you've mentioned. So while the group will certainly take a hit on its bottom line results, as due to the write-off, this business in Russia has been underperforming. And, I think for management trying to turn around this business in light of the current challenges that come with conducting business in Russia will likely not be in the best interest of the company's bottom line performance. So overall, it remains to be seen whether the company can find a buyer for this business and what the terms of the sale would be, and if any value would be realized from the sale of this business.
Talk to us about Mondi's latest trading update that's just come out.
So their third quarter operational update was positive and mostly in line with market consensus estimates. We're seeing higher average selling prices and overall volume growth more than offsetting significant cost pressures. Their profit for the quarter is up about 55 basis points when compared to the same period last year. And this is obviously despite higher wood and energy costs, as management was sort of able to mitigate against significantly higher European gas and electricity costs. However, their corrugated box volumes were lower in the third quarter due to softer demand, as well as a very demanding base. But we've seen flexible packaging, performing quite well with resilient demand and price increases being implemented. So the company also stated that it was still waiting for the Russian regulatory approval for the sale of their business in Russia, which has been sold for about $1.5 billion US. So part of which, the company will distribute as a dividend to shareholders. But overall, we expect the company to remain quite resilient and to deliver very decent results for the full year.
And lastly, Vodacom intends to spend about 340 million rand on expansion of its network in areas in the central regions of the Free State and Northern Cape. How strategic a decision is that?
So, they are planning to expand, broadband coverage in some of the rural areas of South Africa. And I think it is positive, or rather it's a positive move by the telecommunications company, as this will assist in improving digital access to some of the remote regions with very limited network coverage. So this forms part of the company's network rollout program and will also, increase the number of 5G sites in the country's central region. So the company previously did announce, a plan to spend about 11 billion rand this year to enhance its network infrastructure, and the allocation of new spectrum will definitely help to accelerate this 5G services.
Thabiso Mamathuba, a pleasure to speak to you. Have a lovely weekend.